Hey there, we're back. A few little internet connection issues, but we moved locations and hopefully we'll be all right today. So my name is Darla and we are on Real Talk Live today, and we're sitting at the offices here in the Woodlands of First United Mortgage Group, and I'm here with Jessica Taylor today with the Taylor Team Texas, and I'm excited because Jessica is the VA guru over here, and I often send a lot of my VA clients over here to talk to them and get pre-approved. So today, Jessica is going to walk through the process with us, and we're going to talk about all kind of things. We're going to start with a little introduction from Jessica and who First United Mortgage Group is and what makes them so great. So Jessica, you're welcome.
I am Jessica Taylor, and I'm with First United Mortgage, and we, my team in particular, specializes in VA loans. And I guess part of the reason for that is when I started doing loans 12 years ago, I was just outside of Camp Lejeune in North Carolina, and so 95% of the people I dealt with were veterans or active duty. And so, you know, that's kind of where I learned to do mortgages. And then when I came here back to Houston, where I grew up 10 years ago, I, started doing some other types of loans, but VA's kind of always been our go-to loan. So First United is a great avenue for veterans because we try and do what's best for the veteran, and with being a company that services our own loans, it enables us to go by the VA guidelines and not have a lot of extra stuff layered on top of it. So it enables us to qualify veterans that a lot of lenders can't.
And I think we've talked about that before, the differences in why we partner with so many different types of lenders, because every lender is not the same. You have a base that each is going to require, and then for each lender, they have another set or 2 or 3 or 4 layers depending on who is providing that money for them. So with Jessica and them, they service it here in-house, which means that they're able to do things that other lenders may not be able to do. So where one may not qualify you, or they may qualify you for one amount, they may be able to qualify you or qualify you for a higher amount or even a better interest rate. So much like we tell you to shop your realtors because the experience and knowledge is key, the same thing with lenders. Not all lenders are the same. And I work with a lot of different lenders that provide different avenues and different products depending on your personal situation. So we're going to talk today. We're going to start with, tell me a little bit about who qualifies for the VA loan.
So for VA, it can be active duty veteran or active duty military or veterans.
Okay.
For them to qualify as an active duty military member, they have to have served at least 90 days.
Okay.
And then once they get out of the military, they have to have served at least 24 months, or there's specific other criteria if they were in a combat zone. There's other things that allows it for less time than that.
What about our reservists?
They also qualify. Those are a little bit trickier because they typically have more than one period of active duty, but we basically are able to pull together all of those different DD-214s that show their time in service and submit it to VA for approval.
Surviving spouses, do they qualify into that program?
They can, yes. Absolutely.
Okay. And so tell me a little bit about what documents are needed for you to determine who's qualified.
The main thing, if you're active duty, there's not really a lot of documentation that you have to have. If you're out of the military, then you typically need to have access to your DD-214, and that's basically going to tell us, how you were discharged from active duty and what amount of time that you served. And then as the lender, we can submit that for you. A lot of veterans think that they have to get their own certificate of eligibility from VA. They don't have to. We can do that on their behalf.
Okay, so once you get the information from them, then you go and you pull that information. They don't have to really do anything.
Yes.
So, okay. What qualifications need to be met? Once you've determined that they do qualify for the VA loan, what qualifications are there?
So it really, there's there's not a lot of difference, for a VA loan in comparison to other types of loans as far as just general qualifications.
Like credit score, minimum
credit score, right. So you can, it's very similar to FHA, as far as going not every lender again is going to do that, but in general you can get qualified down to 580. Okay. Debt ratios are a little more lenient with VA, similar to FHA. Mm-hmm. And they're basically, you can do it with zero down, mm-hmm. as long as they're within that conforming limit. So a lot of veterans I talk to think they have no money out of pocket. There are still closing costs involved with a VA loan, and so it's important to kind of look at those and weigh those options too.
Right. Awesome. Okay. What if a vet comes to you, and tell me a little bit about what your DTI is? Because a lot of people come to you, and while they have a great credit score, mm-hmm. their debt to, what we call DTI or debt to income, makes a little bit of difference in not only whether or not you qualify, but your interest rate and a lot of other things. So talk to me a little bit about what your debt to income means.
So debt to income is basically looking at your gross monthly income, mm-hmm. in comparison to your monthly liabilities. Mm-hmm. So monthly liabilities include the new mortgage that you're getting, mm-hmm. along with any other loans, minimum credit card payments, child support can weigh into that, anything basically monthly debt that you have. We don't include utilities, cell phone bills, that kind of thing, okay. in your monthly liabilities, but VA is one of the rare loans that they look at your residual income. So okay. they look at, once all those debts are paid, what do you have left over? Okay. And that does weigh into qualifying for VA. Okay.
What about child support, student loans, if those have been taken out? How do those apply with a VA loan?
So all of the different types of loans require us to count some form of payment, okay. for student loans. VA has a formula that they use, and you basically take 5% of the balance divided by 12. Okay. And so that's what we use for student loans.
Okay,
for
so
VA.
They're not looking at the total amount,
right.
They're doing a percentage of that
to figure a payment.
Correct. Yes. So if you have those things, medical debt, I'm assuming, mm-hmm. applies under that as well.
Medical debt is not typically considered,
okay.
Going VA,
okay.
and there are other types of derogatory credit that can be excluded.
Okay. So if you've been sitting there waiting, going, well, I've got student loan mm-hmm. debt and I've got a lot of credit card debt and things like that, you probably need to reach out and let's connect up and see if let someone that does this on a continual basis look at it and determine what you qualify for after you have those things looked at.
The one thing, to remember about DTI is, VA is one of the more lenient types mm-hmm. of loans mm-hmm. in regards to that. So a lot of times when you're working with a lender that services and keeps their loans, there's not necessarily a hard and fast limit on it.
Right.
Some of the bigger banks, will say 50% is our max, and they
right.
won't go above that no matter what. Just
right.
because you've gotten a no from, one lender doesn't necessarily mean that it can't be done.
Yeah, because the VA has a requirement for DTI
right.
percentage, but each lender then will add another layer
right.
to that depending on what their investors or where their money's coming from, mm-hmm. who their underwriters, who they have to report to. That will change that amount. So everybody starts at the same level on a VA loan, but the lender is who's going to make the difference
right.
in each of those numbers and how you qualify with that. So let's talk a little bit about the VA loan of old has mm-hmm. changed a lot to what the VA loan of today is. So I personally know that a lot of people, when they talk to me and they haven't used or haven't accessed their VA loan in a mm-hmm. long time, they think they were told they could only use it one time. So they bought a house back in 1970 or 1980. Mm-hmm. They used their loan then, and they were told that they could never use their VA loan again. Right. And then there were dollar amounts there were limits to that. So tell me a little bit about where we are today, kind of in comparison to how things have changed.
So you can use your VA loan more than once. You can actually have more than one VA loan at a time.
Exactly.
Which is something that a lot of veterans, that's a myth out there that they can't do that. I guess the key with that is that the two loans don't exceed the conforming limit, right? So right now our conforming loan limit is about $647,000. It's going to go up to $715 in 2023. Okay. But basically the two loans can't exceed that amount, and the second loan has to be more than $144,000, right? Which is, in most cases is pretty easy to do because they're trading up or doing something along those lines.
So why would someone want to use more than one VA loan at a time?
Zero down, right? So, let's say you bought a house, your first home for $200,000, and you don't necessarily want to sell that house, right? You want to keep that house, hold on to it as an investment and rent it out, but you want to purchase again, and you're not going to have that equity to pull from that house towards the new one. You can, purchase again using zero down.
Correct.
Just because you're exceeding that conforming limit doesn't mean that it can't be done. It just means that it can't be done with zero down. Right. So there's VA has like a calculation worksheet that we can use to figure the eligibility if you go beyond that amount.
So what are the benefits of using the VA loan? We have zero down, which we know doesn't mean no money out of pocket. It just means no down payment. What else goes along with that?
So VA loans don't have a monthly mortgage insurance, right? So unlike FHA or conventional loan, where if you do less than 20% down, you're going to have that monthly additional debt. VA doesn't have that.
So no PMI.
Right. They do have a funding fee, right? If you're a disabled veteran, that's waived for you. But that monthly expense is not there. So in general, when we compare monthly payment, using VA versus something else, for most borrowers, VA is the better option.
Okay. So we're looking at no down payment. We're looking at better interest rates, typically, depending on each individual. And then we're talking no PMI.
Correct.
So on a monthly note, that could make a huge difference between going with a conventional loan or going with an FHA or something else. So let's go back to more than one loan. So if you are someone like Jessica was saying, that you bought a home back in, the 90s, and you bought it for, good Lord, $55,000, which is possible because I did it. And now you're looking at moving up, and you don't want to get rid of that home because it is a good investment opportunity for you. You're able to keep that home and use the rental income off of that as part of your residual income, and then you can qualify under the VA loan program for another VA loan under that same scenario. You can do this again a couple of times until you reach that loan limit ceiling that they have. So that is, if that's something that you're thinking about doing, you weren't sure how that would all work out, give me a call. Let's get you hooked up with Jessica. That may be a really good opportunity for you that you hadn't even thought about.
Absolutely.
So let's talk about, can requirements change between lenders as far as, here recently I've had a scenario where I had one buyer that came in, and she gave me a pre-approval amount from one lender, and we brought it over here because she wasn't happy with that. We brought it over here to Jessica and her team, and they were able to get it there. So again, requirements between lenders are very different, and one does not necessarily mean that you can't qualify or get what you're looking for if you're looking for a particular situation. So let's talk about the VA loan process. How long does it typically take to close a VA loan?
In general, I'd say right around 30 days. We can do it quicker. It can be a little longer sometimes, just depending on the scenario, but in general, right around 30 days.
Okay. And typically, if we run someone through, if you're needing a quick close, if we run someone through underwriting before we go under contract, that can shorten those days with the closing on that as well. So there's a couple of different options if you're looking for a shorter close time. Let's say your lease is coming up, or you're needing to move because of whatever other reasons. There are some options with that for you. So when you're looking at the VA loan, tell me a little bit about the differences with a VA approval process. Let's talk about the appraisal first. Let's talk about inspections first. So when we get you qualified, you find that home of your dreams, we execute a contract. Now we're going into the inspection period. So tell me a little bit about if the VA loan inspection process is different than an FHA conventional, because I think I got a lot of backlash during COVID with realtors that do not know this product and were discouraging their sellers from accepting this product when they really had no business doing that, because it's not the same as it was even from my boyfriend's mom, who they bought with a VA loan, and it was completely different 20 years ago. So let's talk about the inspections.
So a lot of I guess as far as inspections go, lenders don't require a home inspection in general, right? It's the buyer's prerogative whether they want to do it. With VA, there are some inspections that are required, right? So we require a termite inspection, and that inspection basically has to show that there's no active infestation, or if there is, then it's been treated, and that there's no conducive conditions to termites. So those can be sometimes silly things like soil levels in the flower beds, or form boards that weren't taken out when they made, just kind of things that are, a little bit pickier than some loans, but not anything major usually that needs to be done.
And I think it's mainly most things that people would typically maintenance their home with. We're not going to have rotten wood on patios. We're not going to have trees all over touching the roof, which is basically a highway for our lovely Texas flying cockroaches around here and our huge carpenter ants. And then the other thing is like the soil levels, because all of those things are conducive to bringing insects and things in. So those are typical home maintenance things that most people are going to do. If you run across a property that is in not that great of condition, and it comes back with those conducive conditions, what do we do with it?
So basically we just, the seller or whomever would fix those items, and then usually most termite inspectors will allow you to send pictures showing that it's been done, and then they'll send a clear report.
So what we do is we negotiate that during the option period, and we get the seller to address those items and take care of that. We get those items cleared off, we send it back to the underwriter, and we're back in the game again. So what other kind of inspections are required?
So if the property has a septic system or is not on city water, then we would require those 2 inspections as well.
And so what are you checking for?
The water test is going to check for nitrates and
about 25 different kind of contaminants.
Contaminants.
Because if you're living out in the country and you've got a water well that's been there for 30 some odd years, we want to make sure that it's not being infiltrated with things underground that maybe you weren't aware of.
And the same thing, as far as the maintenance goes, if the house has been being lived in, and they've had active septic maintenance and all of those things being done, then usually you're not going to have any issues with that. If it's been sitting for a while or hasn't been properly maintained, then there may be some things that come up there.
And I think the biggest reason, again, these are things that homeowners are going to be maintaining on their homes anyway. If you have a home that's vacant, those are the things we really want to look at, because sometimes they may have been sitting a little bit, and we know that when things sit, they tend to deteriorate. The whole purpose of this, for this particular loan product, is we're taking care of our vets. We're making sure that they're not getting into a home, because a lot of times they don't have money down, they don't have the closing costs, but they have the ability to purchase. And so it's a product that's able to really exemplify home ownerships to people in the military that have served the country. So what we're wanting to do is make sure that when they move in there, they're not taking on a ton of issues with that home that then make it difficult for them to maintain it, bring it up to levels, and then they start getting behind on notes and things like that. So that's the biggest reason.
It truly is protecting them as the veteran, which I think is a lot of the concern of sellers or listing agents
They
you
get
mentioned. Right. You know, they're hesitant to accept those because they do know that it's looking out for the buyer.
Right. But we're not talking like super crazy picky things. This is things that as a homeowner, you're going to be taking care of on your home anyway. So if you're a seller and you're in the process of selling and you have a VA client, a buyer that comes through there, ask your realtor a lot of questions. Have your realtor call the lender and ask a lot of questions. Don't just assume that it's not going to work out for you because it is a VA loan. We've got a whole different scenario today in 2022 than we had even 5 years ago. Things have changed a lot. So a water well inspection, a septic inspection, and a termite inspection, all three of those are the things required. If you have the septic and well on the property, those are required. They take somewhere, the well inspection, the water inspection is going to take a little bit of time to get back. That's a lender required repair. So even if it comes out of your option period, it's still something that can be worked on and negotiated even after we're out of our option period. The septic usually comes back pretty quick. The termite usually comes back pretty quick. So now let's talk about, we're through that, we've negotiated that, and we've ordered the appraisal. So for a buyer with a VA loan, the lender is the one that's going to be taking care of ordering that appraisal for you. So let's talk about cost, and let's talk about what that appraiser is looking for differently than with any other product.
So the appraisal cost is generally $550 to $750 is what they're going to be looking at for that. A lot of lenders will require that to be paid up front, but you know, then it gets credited to those closing costs. I know we put all of those costs, you know, in their loan estimate, but then anything that's paid outside of closing gets credited. But once we order that appraisal, the appraiser has 10 business days to do the appraisal,
to complete it,
to give the report to us. You know, the hesitancy sometimes from sellers or listing agents is they take forever, right? You know, that's not necessarily true. You know, conforming loans generally take 7 to 10 days for an appraisal, so it's about the same. During
COVID, we had a lot of problems with every loan type. It wasn't just a VA loan. We were hitting 20, 25, 30 days just because during the pandemic we had refinances going on, which takes appraisals, and we had a ton of buyers going on, so they were overworked for sure.
In fact, I think VA was our quickest turn
yes,
during COVID,
probably so,
because they definitely try to hold their appraisers to that standard of 10 days.
Talk a little bit about how that appraisal may be different, but not scary, but a little bit different than like an FHA or a VA. Because we do follow kind of FHA guidelines.
So generally, if a house will pass an FHA appraisal or not have an issue, you know, with an FHA appraisal, it will generally do the same with a VA appraisal. You know, the only thing, you know, when I talk to a listing agent about a VA appraisal being done, I typically ask them, you know, what does the roof look like? Does it have at least 5 years left on it? You know, the appraiser isn't going to say it needs to be replaced, but if it looks like, you know, there might be some leaks in the ceiling or something caused from the roof, then they will call it out and say we feel like a roof inspection is warranted. You know, their wood rot is another thing, you know, that they'll call out on VA and FHA if there's any siding that, you know, looks rotten.
And again, your termite inspector is going to have pulled that information out. So we would have addressed that in the very beginning.
And then anything other like safety concerns, you know, anything that they see outlets that aren't, you know, covered or working correctly or, you know, that kind of thing. They're not a home inspector, so they're not going to check every little nitpicky thing.
But they're looking for obvious visuals.
Exactly. No railings on staircases is something that we've had come up, you know, things like that.
So what about, speaking of that, what is the basic things that a home must have in order to qualify? Because sometimes we have a buyer that will come through and have a home that needs a little bit of work done to it. So what does that entail?
So it does have to have a stove, and as far as appliances, doesn't have to have fridge and all that kind of stuff, but at least a stove. It does have to have central heat and basically just a way for the house to be cool.
You can have a window unit.
Yes,
Yes.
I'm going to say yes.
Okay.
I believe yes, you can. It just has to have something.
It has to have some heating and cooling element to it. It can't just be nothing there and we've got heat or cold going on in the winter without the buyer being able to do that.
And then the other thing that sometimes comes up is missing flooring, missing sheetrock, not having a working bathroom. I mean, in general, if the house is livable and doesn't need a ton of work, then it will generally qualify.
Okay. But what about light fixtures missing or outlets without covers on them or things like that?
Yeah, things like that, and mainly for safety reasons.
Correct.
But yes, those type of things will be.
And sometimes those are things that we can address with the seller from the very, very beginning. If they do accept a VA buyer, then we know as realtors that are experienced with working a lot with the VA loan, we know as we're walking those homes, because I had to do a lot of that during the pandemic, where I was walking homes from people that were moving here from California, from New Mexico, from Kentucky, from Florida, and they're like, couldn't get here. And so I'm basically walking around the home showing them the things that these are going to get called out as a potential issue. So we would address that with the seller from the very beginning and say, okay, how can we work this out to make sure that when the appraiser and the inspector comes through here, those things are addressed already and we're able to pass that inspection.
And sometimes, listing agents will not put VA loans as an option on their listing, and we find that a lot of times it's just because they don't know.
They don't know the product. That's exactly right.
If it will work.
Right.
And so, you can definitely ask your lender to call the listing agent or your buyer's agent to call and ask them, hey, what's wrong with the house that you're thinking that it wouldn't pass?
Right, and that's exactly what I do. I call them and I say, look, I've got a buyer that's interested in it, but I see you don't have it listed as financed by VA.
Right.
Tell me a little bit about why you think that is. And I will tell you 9 times out of 10, that listing agent really doesn't know the VA product. And when I tell her, look, we've dealt with that before. That's not a big deal. You just cut out a third of your seller's buyers with that. So I'd go take a look at it and I would make the determination along with the buyer if that was something that they wanted to pursue. And then I might see other things that were like, well, they didn't know that's an issue. So I always call and ask, even if it doesn't have that financing option on there. Okay. So we talk about no money down for the VA loan, but there are other closing costs, and we talked about that last week. So with closing costs, a lot of times our VA buyers don't have the closing costs to cover. So what I know for us, we talk a lot about when, we've got buyers that learn that they have to pay closing costs, are like, well, somebody told me that I don't have to pay anything and we can make the seller pay for our closing costs. That's not the case. I mean, it depends on each home is different and each seller is different. We can certainly request that, but there are closing costs that go along with that. So talk a little bit about the closing costs that go along with the VA loan in particular.
So they're really going to be the same as other types of loans for the most part, right? There's those few inspections that are kind of required that might not be on other loans. But as far as closing costs, we generally say that, to plan for 2 to 3% of, the sales price. So if you're purchasing a $300,000 house, then you're going to plan for $6,000 to $9,000 in closing costs.
Right. Because you do have that VA funding fee. That's
there. Financed in. Okay. So we don't typically, most VA buyers aren't going to pay that out of pocket, right? They're going to choose to finance that in. But, you do pay for your 12 months of homeowners insurance up front. You pay for, the appraisal and title fees. A lot of buyers are choosing right now to make their offer more competitive by paying their own owner's title insurance and things like that. So, those all come into play. At First United, we don't have any lender fees right now. We're completely waiving lender fees for VA buyers. And so a lot of lenders do that. They don't charge an origination fee or, underwriting, processing, all that kind of stuff for veterans. So that's one thing less that you're going to have, and something that we look at, if we do have a buyer that, let's say they have 10% to put down and they're, weighing VA versus a conventional loan, that's something we look at. That's going to save you $1,200 by not having to do that.
Because if you are paying your own closing costs out of your pocket, you want to make sure that you keep those as low as possible. And last week we talked about the 3 or 4 things that make up what your closing costs are going to be, and part of that is your lender fees, part of that is your title fees, and part of that is your prepaids, and the rest of it's what we've negotiated in the contract. So you're going to want to make sure that whoever you go with as a lender, you also are looking at the fees that you're being charged on that. And right now they have the 0 lender fees going on here. So if you get qualified with Jessica, then you've got a lot less fees that you're looking at. If you're 100% disabled, that VA funding fee isn't even covered in there. Otherwise, it is processed into the loan. Last week we talked about, can I put the closing costs into my loan? And we talked about how we do that. If we don't negotiate it with the seller, we talk about the different ways that we can, because you can't necessarily throw it into the loan. It has to be something that's negotiated, because the buyer and the seller, somebody has to pay for that, because the lender is not paying for the closing costs. No matter what they say, the lender is not paying the closing costs. You are paying for that somewhere, or the seller is.
The other option, so last week we had a buyer that was similar scenario. They knew it was going to be a competitive situation with the property that they were looking at, and we were able to qualify them, which we have this benefit here in Texas, for a down payment assistance program that covers a portion of the closing costs. So, there are income limits, there's another whole set of criteria on top of that, but you can do a VA loan with 0 down and get 3, 4, or 5% assistance from some of these Texas programs to go towards those closing costs. So there's a trade-off, right? There is a higher rate for those programs, but in the end, if this is your first home and you're trying to build equity and you're trying to get into that home, even if it's not your first home, sometimes it's a good option.
So closing costs can be covered whether you're doing it through the seller, whether you're paying your own, or whether you're working with Jessica and some of those Texas grant programs where they pay for down payment or closing cost assistance programs. You can get into a home with almost 0 down. You still have to pay for inspection, but pretty much 0 down. So how we talked about property requirements. Can a mobile home qualify for a VA loan?
It can. It can. So we don't do manufactured loans or manufactured home loans here at First United. I have worked for companies in the past that do, and there are companies out there that will. And some of those down payment assistance programs allow for that as well.
And I think the thing with a mobile or a manufactured home with the VA, it follows the same strict guidelines that the FHA has. So if it qualifies for an FHA loan, it typically will qualify for a VA loan, but not all lenders will do a mortgage on a mobile home with a VA loan. And that program changes a lot. Not with the VA, it changes with lenders. So
and generally manufactured home loans are going to have a higher interest rate, a little bit higher there, and
why is that? I mean, it's basically due to
it's a greater risk, basically.
So what do they call that? Life expectancy, basically, with the mobile home, because the mobile home doesn't typically go through time as well as a structured built home. So they're looking at life expectancy. There is a little bit more to qualify with that mobile home, depending on a lot of different factors, and that is one of them.
And so they do look at the age of the home as one of those criteria, and then they also look at the foundation. So there's another inspection that you do have to get, right, that requires them to look at that and say, yes, it meets the standards of being on a permanent foundation. You know, wheels have been removed, it's got the appropriate skirting or foundation or tie downs, all that
Hasn't
kind of
been
stuff.
moved more than once.
Right.
So if we have a lot of our buyers that come through that go through the rural property areas. There are a lot of homes on 3 and 4 and 5 acres that have a mobile home.
Right.
Built in 1978, not going to fly. Why? Because the life expectancy of that has diminished the value on that mobile home, and now the land is probably worth more than the mobile home is. So that becomes a zero no. If you're talking about a brand new mobile home on an acre that has been only moved that one time, it's been tied down, skirted, you know, whatever. If it qualifies, then that will definitely. You do have to have an additional inspection required, and that's a structural inspection along with probably your well, probably your septic, and most certainly your termite. So that's something to think about when you're looking at the VA loan. It is possible with a mobile on land to do that. There's just a little bit more layers that have to be covered with that for sure. So here's a really good one, because we talked about this a second ago. What would you say to a seller or their agent if you heard that they don't want to accept a VA loan because it's more strict or they get less value on it?
So in regards to value, you know, it's the same, right? So, you know, VA appraisers are looking at and pulling the same comparable properties in that neighborhood. They are basing it on the same factors. What I tell, you know, those agents is that it's more important that you're working with a local lender that's pulling from a local pool of appraisers than it is VA or not. Because if you are working with an online lender that's out of, you know, somewhere not here, and they're using their VA pool of appraisers, you might get somebody from 4 hours away that doesn't really know this area.
Exactly.
And so that, you know, as an agent accepting or helping your sellers navigate accepting an offer, that is more crucial than anything. But as far as, you know, accepting a VA buyer, I think there's this stigma kind of out there about VA buyers that because they're putting zero down, they are not as well qualified buyers.
Absolutely, which is so not the case.
It's not true.
It's so not true.
In fact, you know, some of our veterans are more well qualified, you know, than FHA or, you know, some other types of loans.
They're literally using the benefit of the VA loan to purchase their home. So don't think that just because they come in at $600,000 and they've got zero money down, they're asking you to pay closing costs, that they don't qualify for that. I guarantee you, if they've got the right lender, they are qualified for that. So if you're a seller and you're working with your agent and you've got that product come through there with a buyer and it looks really good, but your agent is not really sure if that's a good loan product for, you know, you to look at, ask questions. Don't just assume, ask questions, because the VA loan is a lot like all of the other loans. It offers a benefit to the vet or to the active military or to the surviving spouse. So don't discount it. Make sure that you ask the right questions. If you're a buyer, please make sure you're using an experienced realtor. Not every realtor knows the ins and outs of that product. And if you're looking at a typical property that there are no issues with it whatsoever, that's one thing. But if you're looking at something that's older, if you're looking at something as an investment property, if you're looking out in the country, you need to know, because what you end up losing is time and money. Because if you don't get qualified because of other issues, you have the potential to lose not only your inspection money and your option money, but you have the potential to lose your earnest money as well.
Working with a buyer's agent that understands the process and knows that you're going to need that termite inspection up front, and just saves you so much time and energy in that process.
Are there any fees that are required? It used to be that there were required fees that the seller had to pay. Does that exist anymore?
So Yes and no. There's so it used to be that there's a list of what they call non-allowable fees, that the veteran is not allowed to pay.
Okay.
Those fees still exist.
Okay.
However, a few years ago they changed it and they allow the veteran to pay up to 1% of those fees.
Okay.
So there are certain, attorney fees and, the termite inspection, things like that, that a lot of realtors assume that their seller is going to have to pay because that's the way that it used to be.
Okay.
That's not the case necessarily anymore. If you're working with a lender that is not experienced with VA or that requires a flat 1% origination fee or something along those lines, then that eats up all of those fees, then they would be required to pay that. But as long as you're working with a lender that does not have a high, origination charges and all that kind of stuff, then they can pay for the termite inspection and some of the nominal fees that add up to that 1%.
Right, yeah, because I closed a lot, and even here recently, where my buyers are paying all of their closing costs.
Yes.
And so we didn't have to ask the seller for anything above what we did maybe during inspections or things like that. So it is possible to make that sure that works.
Yep.
So thank you very much. What we're going to do is our takeaway today. On our takeaway, we're going to work with a realtor that's knowledgeable in the VA loan. That's very important, who has a working relationship with a local lender. That's extremely important. So if you're thinking about buying, if you have you or a family member that is a veteran or is an active military, and you know that they've been talking about purchasing a home, have them give me a call. We will get them hooked up with Jessica. You can go on my website as well, which is also in the link here. If you go over to the resources, you'll see pre-approval link here. That gets you directly to the Taylor team over here at First United Mortgage, and they will get you set up, and they'll let me know as soon as you've got all that paperwork in, and we will work on that. You want to make sure that your lender and your realtor have up-to-date knowledge of current market conditions and how that affects the VA loan, because things change constantly in our business. And coming out of the pandemic, and we've been into these mortgage interest rate hikes and things like that, we want to make sure that if things have changed, the lender's going to let us know really quickly, because we've had some things happen with this last interest rate hike on here where we've had to take an assessment and look at different things with our buyers. So it will save you precious time and precious money to use experience. You're, as a buyer, not paying for experience, but believe me, you will pay for the experience if you don't use the experience. So we're going to talk about the listing of the week this week. We have Courtney's listing on 26239 Long Street in Splendora. This is a completely rehabbed home from top to bottom. It is that beautiful black and white look. It has a workshop out and back. It's sitting just under $295,000, which is primo space right now. It's just under an acre with 4 bedrooms, 3 baths, and a little over 2,500 square feet. It does qualify for VA. So you're talking about a completely rehabbed home on just under an acre with a workshop under $300,000. So the other benefits of it is, if you're using the VA loan, you've got 0 down on that. You've got no mud. It has public water and sewer, so no issues with inspections there. It has no HOA, so no HOA fees, and it's only 2.33% on property taxes, which, as you know, if you're looking at Valley Ranch or you're looking at some of these other newer Tavola, Harrington Trails, some of these newer, you're going to be looking at 3.2, 3.5 on some of those at the same purchase price. So this one is, you're talking about your monthly mortgage. With a VA loan, you have no PMI, you have lower on the property taxes, you don't have any HOA fees, so all of that's going to help. And we also have a lot of our lenders are buying down rates at the moment, and if you negotiate it just right, sometimes we can get the seller to reduce that interest rate for you by buying it down. And so now you go from the current interest rate, you can buy that down and get even a better mortgage on that. So give me a call. I will hook you up with the right people. So other than that, thank you for watching us on Real Talk Live today. Jessica with First United Mortgage Group here in the Woodlands. And you're going to want to pop over to the YouTube, share it with your friends if you have someone that you know is looking, or you just didn't have time to watch it today. We're over on Design Realty Group Facebook page. I also now, have a link on my website under the Buyer Sellers tab, or you can catch that probably starting tomorrow morning. We also have a buyers seminar coming up next Thursday where you can sit, get a free meal, get a free credit pull, and we're going to sit and talk to you and give you some ins and outs on what it means to be a buyer these days and how we can help get you in that loan. We've talked several weeks about stop waiting. The interest rates are only going to continue to rise, okay? Number one, you want to marry the house. We still have low inventory levels right now. And the interest rates are, while they're increasing, they're still within our normal ranges of where we are average over the last 50 years. So we're still at really good rates, okay? Marry the house, don't marry the mortgage. You can always go back in when those rates start to drop, refinance that loan. It is not that big of a deal, but don't keep waiting because the interest rates could continue to rise on you, which only reduces your buying power. So what you could buy 3 weeks ago at $250,000, you're now going to be sitting somewhere around $215,000, $225,000. Okay, so don't wait. If you're wanting to do this, let's not wait. Let's get in. So if you have any questions, make sure you reach out and tune in next Wednesday where we're going to be talking with about loan products and pre-approvals and kind of what some of those things mean if you're looking at starting the buying process. So tune in next week, Facebook page on the Hayes team, live Wednesdays at 11. Y'all have a good week. Bye.
Thank you.